Good day, everyone. And my name is Roxy Bellington. And today, this is the second episode of this playlist and of learning smart money concepts. Okay, smart money concepts which were introduced by Michael Harrison. His name is ICT. Okay, so when you come here, okay, when you go to YouTube, okay, then you search for inner circle trader. Inner circle trader. Okay, this him he has 1.86 million subscribers. Okay, that's ICT, and he's my mentor. Okay, he has so many videos for you. If you go to his playlist, you can get his core content, his starter content, his private mentorships from 2017, 2016, his core content from month 1 to month 12, Scout Sniper, Market Maker, Forex Series, Pattern Recognition, a whole lot of videos. Okay, so this is where I learned everything I knew. Okay, I learned everything I knew from here. And some of the playlists have like 24 videos, some have 41. Okay, some have 19, and I think the highest I've seen is the 2023 mentorship, which is 105 videos. Okay, so you can come here and come and learn everything. Okay, but I'm trying to teach everything from scratch. Okay, you see, I want to teach my model or teach what me I do. Okay, I like how I interact with the market whenever I wake up. But before I do that, I need to teach you the basics. Okay, but if you think my model is too much for you, too much to understand, you can come here, learn learn his videos, especially his 2022 mentorship, which is he has a 2022 mentorship, and it's a very good playlist. I would recommend it to everybody. This one, 2022 ICT mentorship. This mentorship has this men, this mentorship has this ICT mentorship. It's um it's 40 videos, exactly 40 videos, and it has a whole lot of information. Okay, my entry criteria, I mean the way I enter into the market, whether I want to buy or sell, is based on this 2022 mentorship. I enter based on the unicorn model. Okay, yeah, and it's based on this 2022 mentorship. So you can go there and enjoy all his videos. Okay, so his name is the Inner Circle Trader. He has 1.86 million subscribers. Okay, this him, and this everything about him. He has a Twitter channel, his official website, and a Telegram channel. Okay, yeah. So today I'll be talking about market structure and how I can link the open high low close of a candle, open low high close, depending on whether it's bullish or bearish, to market structure. Okay, so today I'll be talking about market structure. Okay, okay. So when we talk about market structure, you see the market is if it's not bullish, it's bearish or it's consolidating. Do you understand? Yeah, there are phases in the market which is the accumulation, manipulation, distribution. Okay, I think I should teach that one first. But before I teach the accumulation, manipulation, distribution, I would have to teach you what we call an impulse move. Okay, we have something we call an impulse move. impulse move. When we talk about impulse move, we can have a bullish impulse move and we can have a bearish impulse move. And an impulse move or a bullish impulse move, okay, let me say a bullish impulse move, it's a move with higher highs and higher lows. Okay, when I talk about higher highs and higher lows, you see last time I taught you that a candle has what? A wick or a shadow. Okay, and if you have, let's take this impulse move for instance. Okay, let's say this impulse move here, they move from this side, they move from this side to this side. Okay, that move from that side to that side. Okay, let's focus on just this part, this small piece of information. Okay, so this is a bullish impulse move, and what makes it a bullish impulse move? It's creating higher highs and higher lows. Okay, what do I mean by a higher high and a higher low? Okay, this is what I mean by higher high and a higher low. You see, the move started from here. Okay, then it moved up. This is a what? It's a leg. This is called a bullish leg or a bullish impulse what? Move or a bullish impulse what? Yeah, okay, a bullish impulse move. Okay, and we have what? Retracement in what? In them. Okay, but okay, let me do this. Let me make it more simpler. Something we call um, uh, we have three phases in the market. Okay, we have um, expansion, expansion. Actually, there are four: retracement, retracement, or correction. Okay, let me reduce the size for you. We have retracement or correction, and we have reversals. Okay, so we have expansion, retracement, or correction. You can call it a retracement or you can call it a reversal. Then we have what? Sorry, there are four. I didn't add the last one. Consolidation. Okay, I'm going to show you how each of them looks like. So what you see here from this part of the, you see where my mouse cursor is? From this part here, sorry, from this part here, from this part here to this part here is called what? A bullish expansion. Okay, it's called a bullish what? Expansion. Okay, so let me name it for you. Think you can do that. Okay, let me put this one here. It's called a bullish expansion. Expansion. Okay, this is called a bullish what? Expansion. Do you understand? But in the expansion, you can see that what? If it's bullish, why is it that it's bullish? And you know, for me, my bullish candles are green and my bearish candles are black. But why is it that there are black candles in this bullish expansion? It's because of what we call retracement, which is the second one. You see, I'm talking about the first one. Now I've reached the second one. From year to year, it's called what? A bullish expansion. Do you understand? Even even from here to just here, it's called what? A bullish expansion. From the bottom there to from the bottom there to just here, it's called what? A bullish expansion. Okay? From year to year, from year to year, it's called what? A bullish expansion. But why is it that? Do you understand? This is what? A bigger bullish expansion with what? Smaller what? Expansion in it. But why is it that in this expansion, we have retracement in it? Okay, So I'm come to mark out the retracement for you. Retracement are what? The bearish moves or the bearish impulse move inside the what? The bullish expansion. Do you understand? They are the yellow boxes. They are all what? Retracement. They are all what? Retracement. Okay. I'm not perfect and I can't what? Um, I'll highlight all of them for you. Okay. At least I'll highlight some for you so that you will know what they are. So how they look like. This is a retracement. You see, they are called correction in price. That's why they're either called retracement or what? Correction. You understand? So the bearish part or the part that looks like it is coming down, it is called what? A retracement or a correction. It is coming down to what? To correct price. Price can't just go up just like that, like give bullish candles, bullish candles. No, 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 no. The world is not in this life, nothing is perfect. Okay. The market is not perfect. You can't have just a single bullish move going up. Then there has to be correction in price. There has to be retracement. Do you understand? And in smart money concept, you say that what this retracement come down to grab what liquidity. You get it? They come down, grab liquidity, and they move. Grab liquidity and continue. Grab liquidity and continue. Do you understand? So this bearish movement, bearish what retracement. So this is a what? A bullish expansion with what? Bearish what retracement. Do you understand? And in all the same, we are in a bullish market. That's if it's from year to year, then we are in what? We are in a bullish market. You get me? Now this is how a reversal looks like. You see? What do you see here? What do you see here? I'm going to highlight this part for you so that you tell me what you see from year to year. I'm going to change the color and make it blue. Yes, so in the blue box, what is that? That is what? A bearish what? Impulse what? Move or impulse what? Swing. A bearish what? Impulse swing or impulse move. Sorry. Uh, delete this and do it again. So from year to year, it's very easy. You just need to watch the videos and keep on saying, like, keep on learning and what finding them in your own chart. If you don't sit down and if you just watch the video, don't think you would understand. If you watch the video, you come back and come and watch it again. You get me? If you watch this video, you come back and come and watch it again. You need to watch and understand. So this is a what? This is a very short impulse what move to the downside. Okay, and you see the same thing for the very short impulse move. We have what? Correction in the form of what? Bullish what? Retracement. So now you see we have what? Bullish retracement. Let me make this one. Oh no. Let me make it green. We have bullish what? Retracement. We have what? Bullish what? Retracement. We have what? Bullish retracement. We have what? Bullish retracement. Okay. So you can see that what? In the bearish what? Impulse move to the downside. We have what? Bullish retracement, bullish correction, bullish correction. You can't just have one down move just like that. You understand? You can't just have black candles coming down or red candles coming down somehow without any green candles. Okay. Yes, there has to be what? Correction in price. It can't be that perfect. Do you understand? Yes, because people will say that retail traders will tell you that what they are buyers and sellers in the market. If you see selling like this, it means they are sellers in the market. And when they see the way the movement from this area here to this area here, they'll tell you that what they are sellers in the market and what they are more. And from this area here to this area here, they are buyers in the market and they are something like that. Okay. So these are retracements. So the retracement to the buyers, they don't have power. That's what retail traders will tell you. Okay. Like we say that what when there is a bearish short impulse move to the downside and there are correction in price, they come up. The correction is to grab liquidity and what continue on down. Do you understand? Yes, they grab what liquidity, then they move down. They grab what liquidity, they move down. Do you understand? Now, I've taught you about what expansion, retracement or correction. Now, reversals. Why is it that Ask yourself, why is it that price is coming down like this, but when it reaches this area here, it starts to go up? This is called a reversal, a change in trend. We've changed from what? Bearish to what? Bullish. You understand? We've changed from what? Bearish to what? Bullish. So now this is what? Um, this is a bearish what? Expansion to the downside. And this is a bullish expansion to the upside. Okay. Sorry. Sorry. So this is a bearish what? Expansion to the downside. This is a bullish expansion to the upside. Now this bearish expansion goes down here, then it starts to what? Reverse. So at this point here, this is called what? A reversal. This is not what? A retracement. The moment it reach this point here, then if you see that price has moved from what? Bearish expansion to bullish expansion, it's called what? A reversal. Okay. So this point here, we call it what? A reversal. Reversal. Okay. So this is called what? A reversal, not a reversal expansion. Sorry. It's called a reversal. Okay. So we have retracement, 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 bearish retracement in a bullish expansion, bullish retracement in a bearish expansion, a reversal, that is a change in market from what? A bearish impulse what move to the downside to a bullish impulse move to the upside. Okay. Then the last one is called a consolidation. When we talk about consolidation, this is how it looks like. You see, it looks like a zigzag form. Price is not even moving. Price is not going to the upside. Price is not moving to the downside. Okay, it's just moving sideways like what? Zigzag, something like this. Okay, it can't be that perfect, but it will be something like this, something like that, something like this. Yeah, it looks like that. It's just consolidate. Okay, and let me show you what a consolidation market looks like. I think price consolidated around it. Yes, you see. Aha, you see this. You see from year to year, the whole of this. Do you understand? The whole of this, even though it has what? Bearish impulse swings to the downside with what? Bullish retracement, and what? Bullish what? Impulse swing to the upside with what? With bearish retracement. The whole of this is a consolidation. Do you understand? Even if not the whole of this, this is actually a consolidation, but it's like a bigger I want a much more smaller one so that I can appreciate it. Okay. So even around this area, you're just moving, taking out liquidity here, taking out liquidity here. This is just consolidating. Okay. So you see, this one is what? This one is, and this is what? Moving downwards. This is not a consolidation. Do you understand? But you can find small consolidations inside. Okay. Something like this area here. This is consolidating. Do you understand? This area here is, I would say it's kind of consolidating. This is a typical example of a consolidation. See something? You see this area here. You see price is neither going up or down. It's just moving sideways. It's going down, up, down, up, down, up, down, up. You see, it's just creating what? Highs and lows, highs and lows, highs and lows. Do you understand? So this is what you call it, a consolidation. Do you understand? It's kind of moving in a zigzag what manner. Okay. So I think I'm done with that. So if you don't understand anything, you can rewind the video, watch again, or you can text me in the group or text me in the comment section and I'll reply you. So now market structure. Okay. You see, in this bullish impulse swing that I just taught you right now, okay, price is creating what? Higher highs and higher lows. So this is how, sorry, sorry. Um, yeah. Okay, so let me create a schematic for you people. So let's say we have a bullish impulse move to the upside or a bullish trend to the upside. Okay. Uh, yeah, so if you have something like this, okay, it's a bullish trend to the upside. Okay, why? Because price is creating what? higher highs and what higher lows. So we call this a higher high. Okay, I'm representing it by the initials, which is the HH. I'm represent this one here by higher low, which should be L. Okay, so we have higher high, then we have what a higher low here. Okay, so let's say higher high, it's a higher low, then we have a higher high. Okay, and we have a higher low. Okay, you see what I'm doing? Yeah, that's what the market is creating. It's creating higher highs and higher lows. That's what is making the market what go up. Market structure is what, when we say market structure is bullish. Okay, when we say market structure is bullish, we mean price is creating what? Price is creating higher high, higher low, higher high, higher low, higher high. Sorry. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then what? Higher low. Okay, just like that. Then it continues. So let's go here. Okay, let's go here. So we have higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Okay, so let me take this one here and copy this one. Okay, so we can see that there's a higher high. Okay, so it means that price creates a what? An impulse move to the upside, creating a higher high. Then what does it do here? It creates a what? A higher low at this area here. Okay, you see, putting or finding your higher high or higher low is not dependent on like there's like it doesn't have to be perfect. Okay, you shouldn't try to achieve perfection because you can never achieve perfection. Something like there's a high here, there's a high here, there's a high here, and there's a high here. Okay, they are highs, all these are highs. Okay, so you can't just be putting the higher high on each of them. You should use your eyes to gauge something like from the bottom here to here. You see there is even a high here, but I'm using the highest high. Okay, so from this low to this high down to this low. Do you understand? Therefore, from year to year, I see it as what one whole move to the upside. So I can say this is a what? I can say this is a what? It's a higher high. You understand? I just have to see that price is moving in what? In a bullish trend. Do you understand? I just have to see that price is moving in a what? A bullish trend. I don't need to what? Pick out what? Like the exact thing. I just have to know, oh, price is creating higher highs, higher lows, higher high, higher low. Okay. Um, do you understand? I'm just putting them randomly at what? Highs. Do you understand? Where my eyes can see and what I cannot identify. Okay, I'm not trying to complicate things for myself. The market is already complicated, so everything you do in the market should be what? Simple. You get it? So price is creating what? Higher high, higher low, higher high, higher low, higher highs, higher low. Even this is a what? A higher high, this is a higher low. But what? My eyes saw this high. This is a higher high, this is a higher low. When doing yours, you can do yours like that. Okay. In the same way, when you put your high here and your low here, and you put your high here and your low here, and I put mine just at this area here, we are all bullish. At the end of the day, we all want to see if the price is what moving in a bullish trend or in a bullish impulse move, or has a bullish impulse move, or is moving upward. Yeah, it's that simple. So that's for what bullish prices. Same way for bearish prices. When we are bearish, we want to see what something like this. Okay, then let me do this one yellow. So this one too, we want to see what we call a lower what? This is a what? A lower what? Low. You understand? Because it's bearish, we want to see LL, which is lower low. I'm using the initials. Okay. Then this one will be what? A lower high. Yeah. So lower low, lower high. Then we come to what? Lower low, lower high, lower low. Okay. Then we create a what? We create another lower high, lower low. Okay, lower high, then what? Lower low. Okay, so this is how we do it. Lower low, lower high, become lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So in the uptrend, it's what? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then we have what? Bearish trend, which is what? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. It's that simple. Okay. So let's see if we can find the same thing in a bearish trend. Okay. So let me copy this. So if you want to copy something, okay, you see when I select it like it the outside the outline of the box is blue. It means you selected the LH. Okay. Then I press Control. Then I what? Double click on the LH and I drag. So it will copy it automatically. Okay. So something like this. Sorry. Okay. So let's say this one. You select it. Okay. You select it. Okay. It hasn't been selected. So you select it. You press Control, double click and drag. Yes, it's that simple. You select it. Okay. You select it. Press Control, double click and drag. When you double click, let your hands still be on there. Don't remove your hands from the mouse and drag. Do you understand? It will create this for you. Then you can what? You leave the control, then you can drag this anywhere you want. Yeah, it's that simple. Okay. So, so the same thing, that's what I'm doing here. So this one here, you can say this is a what? A lower what? Sorry. You can say this is a what? A lower low. Okay. Then you can have what? A lower high. Sorry. A lower high. Then you can have what? You can have what here? You can say this is a lower low, lower high. Okay. Then we have what? From lower low, lower high. Our next thing is what? The lower low. Okay. So this is what? Sorry. A lower low. Okay. Then we have a lower high. Then we come down. You see, I saw this. I know this is there, but my eye saw this. Okay. I just want to know that what price is moving bearish. It doesn't have to be perfect. You don't have to name every single high and every single low. Do you understand? Yeah. So this is a lower low. This is a lower high. This is a what? Sorry. This is a lower low, lower high, lower low, lower high. Okay, one is here, one is here. So lower low. Everybody's going to be different. It doesn't have to be the same. Okay. So this is a lower low, lower high. We have a lower low here. Okay. Then we have what? A lower high here. Okay. Then there is a what? A lower low here. Get it? Huh. So the moment price changes from what? You see, we have you watch something, watch something. See something. Lower low, lower high, 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 lower low. Our next thing is supposed to be what? Lower high. But what do we have here? Higher high. What does it tell you? It tells you that what? This area here is what? It's a reversal. Do you understand? So we are reversing from what? Bearish trend to what? Bullish trend. So if you take the part two, this is it's called the part two. You can find it. You can find it here when you go to when you come to I think one, two, three, four, five, six. When you open here, then you scroll down, you find it under shapes. It's called the part two. You can press on the star then to become part of your favorite. If your favorite is not showing, you see the star here. When you press it, it will go. When you press it, it will come. Yes, it's that simple. So if you take the part two, then you do this. Like you trace the path that you've done. Lower low, lower high. You click, then you drag. You click, you drag, you click, you drag to the next point. Uh, you click, you drag, click, drag, click. Lower high, lower low, lower high, lower low, lower high, lower low. What do we get here? Higher high. Do you understand? Then you what? You double click on the part two. the yellow line, you double click it and drag it out. Okay, so you can see that you are creating what? Lower low, lower high, 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 lower low. But here, what do you create? A higher high. It shows you that this area is what? It's a reversal. Okay, price has reversed from what? A bearish trend to what? Now there's a going to what? What is going to happen? There's going to be a bullish trend, and you can see that what is true. It was actually a bullish trend. You understand? Mm. Same for when you have something like this. I'm sure this is in a what? In a bullish scenario. So if you have it in a bearish scenario too, sorry, in a bearish scenario also, you can have something like this, which is what? A higher low. Okay, then you can have what? A higher high, higher low, higher high, higher low. It is, we are moving up, right? We are having a bullish trend. Then we go up. This is a what? A higher high. Do you understand? This is supposed to be what? A higher low. You get it? Aha. So it's kind of like sorry, sorry. So it's kind of like you are in a bullish trend. Okay, okay. You are having higher high, higher low, higher high, higher low, but you are getting a lower low here. The moment you start getting a lower low here, it means that there has been a change in trend. Okay, yes, there has been a change in trend. Lower low, lower high, then price starts to what? Fall. So from bullish to what? Bearish. So this is area is a what? Is a reversal from what? A bullish market to what? A bearish market. Now from a bearish market to what? A bullish market. You get it? It's very simple. It's very, very simple. So you just have to go through this part of the video. You can go back, watch it again, go back, watch it again, listen to what I say. You can also search on YouTube for other videos about what I say so that you can learn. Okay. The main objective is to what? Is for you to understand what everything. Okay. It's just to understand everything. Okay. And with patience. You get it. Okay. With patience, you get it. It's that easy. Okay. So I told you people that I was going to teach you people um, 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 how you can use market structure with the open high low close and open low high close. Okay, so let's go to a weekly candle. Okay, so when we go to a weekly candle, let's take last week for example, or let's take last 2 weeks for example. This week hasn't finished printing. Okay, this one had a long week. I want to use the one with the body with a lot of volume. So I want to use this candle here. This candle, this candle. This candle was the Monday 11th August 2025. Okay. I'm going to mark what it's a bullish candle. Okay. I know you already know where the high. Okay, it's a bullish candle, so I know you already know where the open, low, high closes. Okay. So I'm just going to mark them with different colors. So let me mark this one here. Let me make this one a high green. Then I'll make the open. I'll make the open black. Yeah, I think black is okay. Then I'll make. Sorry, I said I'll make the open, but I'll make the close black. Then I'll make the open maybe blue. Then maybe I'll make the low red. Okay, so red. Okay. We are dealing with what the candle what Monday 11th August 2025. Monday 11th August 20. I want to show you something that occurred inside this candle. Okay, you should know that any candle you see on a higher time frame, like on the weekly, on the daily, 4 hour, monthly, even on the 1 hour, know that what on the lower time frames are found inside what these higher time frame candles. Do you understand? Yeah. So and whatever analysis you do on the 4 hour or on a higher time frame, it can also be applied to a lower time frame. Do you understand? So right now I'm on a time frame what the weekly. Okay. If you watch here, you see that they've written 1 week. Sorry. They've written W, which is Euro USD weekly. Okay, that's the weekly candle. I want to move to the 15 minutes and show you something. Okay. So when I move to the 15 minutes, yeah, yeah. So Good, 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 good. So you can see something that what this was the low. Okay, Monday 11th August 2025. Okay, you know, let's say that week there was a Monday, a Tuesday, a Wednesday, Thursday, Friday, and what? Sorry, there was a Monday to Friday, simple Monday, Tuesday, Wednesday, Thursday, and Friday. So there's the Monday. Okay, okay, there's around 11 o'clock, but it actually opened around what? It actually opened around sorry, it actually opened around midnight. Yeah, okay. Uh, sorry, let's go around here. Hmm. So let me make that one. Uh, orange, yeah, orange. Okay, then let me mark Friday close. You know, Friday closed around. Think it's around here. Sorry. Yeah. So let's say when the start of no, 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 no. Okay, let's say around this area. Let's say around that area here. Okay. Let's say price Friday closed around this area here. And what Monday started what from here. So this is what one whole week candle. Do you understand? And you know it was a bullish candle, right? So this is what happened. Abi, I told you that what you have the open low high close. And I told you that what I want to use the blue line as the what the open. Do you understand? Yes. So you see the candle opened at what? Midnight. Okay. Okay, I won't say it's opened at midnight. It's opened before midnight. You understand? That's why the blue line is what is at this area here, which is around Sunday. You understand? So, um, you know, um, 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 so, um, uh, okay, okay. So, it's for 20, 20. So, around this area here, the blue line. The candle doesn't start printing on the weekly on like if it's we are going into a week, it doesn't start printing on a Monday. It starts printing on a Sunday around Ghana time, which is 9 p.m. Okay. 9 p.m. That's when the market opens. And Friday 9 p.m. That's when the market closes. Because on Saturday and Sunday, if you don't trade, unless you are trading crypto, okay, you are trading cryptocurrencies, okay. But when it comes to futures and forex and commodities, they don't open on the weekends, okay. And also the this market, when the market closes and it wants to open for the following week, it starts on a Sunday, okay. So the candle open around this area here. But for smart money traders, we take our opening of what the candle at what midnight. You understand? The one with the what? The column 00. If you watch at the X axis of this charter, where they've written Monday 11th August 25, 00 column 00, that's 12 p.m. Do you understand? 12 p.m. Monday. So you can see that when the market opened, what did it do? It dropped. Do you understand? Do you understand? Abi, we said that what a bullish candle that does what open, low, high, then what closes. Okay, so market opened. The open rate is around this area here. You know? It opened at this area here. And what did it do? It created the what a low. That's when it dropped. When it dropped, it created a low here. And I told you people that sorry, if you know how or where the low of the day is going to form, you can catch what the whole move. Or if you know the low of the week, do you understand? Which usually forms in what Tuesdays. It usually forms on Tuesdays or Wednesday. Do you understand? That's what smart money concept will tell you. The low of the week usually forms on Tuesdays and what Wednesdays. But I think in this case it's formed on what Monday. Because this is if you check the week from this orange candle to this orange candle, the whole week, the highest high and the lowest low you can find is what the 1 year and the 1 year. This is the highest high, and this area here is the lowest low. You understand? So it opened, went low, and what did it do? It went to the what the high. Then what did it do? It came for the what the close. You get it? Yes, and it gave you what? A bullish candle. So the open, the low. You see, this is not perfect like how I've been drawing it. And that's how reality is. If you think forex trading is not going to make you perfect, or it's not a perfect market, like you can be making money from it like it's an ATM machine. It's a very difficult job. You understand? It's when it's only for the well prepared and for the what the most disciplined people. So it opened, went low, they went to the what the high. What did they do? Went for the close. So that's why it's called what open, low, high, close. Open, low, high, close. Last time, open, low, high, close. And this will give you what a bullish candle. Do you understand? Okay. So I'm only going to do for the bullish, okay? But I'll advise that you go into your own chart, okay? And when you go into your own chart, go into your own chart and do for the bearish candle part, okay? Find a weekly bearish candle, mark the high, mark the open, mark the close, mark the low, okay? Then come to the 15 minutes or the 5 minutes, okay? You can even go to the 30 minutes, okay? Then you mark what the start of the week, the end of the week, okay? Then you try and know where the market opened, okay? From midnight to from midnight of Monday to Friday of I think uh, 5 here is 5, it's 5 p.m. Okay, you mark the open of the week, okay, like the open of that candle, which is around Monday here, the low, and you find the lowest low where the I don't know the color of the horizontal line you use for the low, no, where the lowest low is, that will be where the horizontal line will be. You can put L here, you can put O here, so open, then the low L, open low, then you put H here, high, then you put C here. You take a screenshot of it, then you save it somewhere nice in a folder, then you name it. Do you understand? It will help you one day. So you do that for the bearish one. So I wanted to show you people something. Okay. My network. Okay. So I think we are back. So you see, so what I wanted to show you was this. You see, price is moving price is moving down. Do you understand? This is a bearish impulse move, creating lower low, lower low, lower high, lower low, lower high. Okay, then lower low. Do you understand? Now it's creating higher high, higher low, higher high, higher low, higher high, higher low. Then do you understand? Then what does it do here? It starts to create lower low. Sorry, it starts to create a lower low, a lower high, lower low, lower high, lower low, lower high. Then what does it do here? It creates a nice higher high, higher low, higher high, higher low, high. You see what the market is doing? It's changing. It just keeps on changing its trend from bullish to bearish, bearish to bullish, bullish to bearish, bearish to bullish. Do you understand? Yes. If you're able to understand what I'm teaching now, these basics and core fundamentals I'm teaching now, the advanced stuff will be very, very, very easy for you to understand. Okay. Yes, because if you're able to understand your basics, you are never going to suffer you when learning advanced stuff. Okay. So if you consider the movements from this low here to this high here, okay, you can see that it's a bullish impulse move, creating higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, then a higher high here. Okay. So it's changed from a bearish trend to a bullish trend. Do you understand? Yes. So you see the way it came down like this, and it's rejected. It's rejected. If you check, and when it reaches the high here, it rejected downwards like this. Why is that? When it reaches the high here, it didn't just come down, or maybe it should go out like this. It should go in this direction. It went this is the original part. Okay, the original part is like this. Okay, then it went forward, some down movement before going forward to the close. Okay, but let's say, why didn't it come like this, okay, go something like this, then what to go for what a close. Do you understand? But why it is that it went for, or it went for, like it went to this direction here, okay, before continuing to the close. You understand? Because it's rejecting off of what a PDRE, or maybe it's rejecting off what previous daily candle high. All these things I'll teach you. Okay, it's rejection of a liquidity level. Do you understand? For what? So that it will what? It will just what? Reverse from what being bullish to bearish. Then now it will respect another liquidity level around this area here and move it up towards the close. Do you understand? So that's why you can see that from here, I think from here to here, no. Around this area here was the body of the what? The candlestick. Then it rejected. Okay. And that was the rejection. Then it went for the close. Because if you check the weekly, if you check the weekly, uh, if you check the weekly, you can see that the candle actually rejected. Okay. So like as I was saying, this is previous weekly was high. Okay. Do you understand? It went above it. I don't know. Something happened for it to what to reject. But that's not the main focus for today. So you can see that what it created a what um it created an open, went for the low, went for the high, then came for the close. Do you understand? Giving us a bullish candle. You see, the bullish candle is just it's there, nicely looking nice, nicely green. Do you understand? But when you go to the lower time frames, that's where you see that nah, it doesn't look nice there. You see the way I went to the 15 minutes and it wasn't looking nice. That's our prices. Okay. So you can find market structures inside a candle with higher highs and higher lows and lower highs. Okay, depending on whether it's a bullish candle or bearish candle. Okay, and you know higher high, higher low, higher high, higher low signifies what a bullish what momentum to the upside, and a lower low, lower high, lower low, lower high represent what bearish movement or bearish impulse move to the downside. Okay. Yes, and you should always remember the open high low close and open low high close of a candle. You understand? You should also remember the phases of a what? The phases of what of a market that we have what an expansion, a consolidation market, a retracement, and a reversal. Do you understand? Yes. So before I close or before I bring my video to an end, I want to I want to talk about something here. Okay, about the phases of the market. See, we have a consolidation market. We have a consolidation market. Okay, okay. This consolidation nicely placed here. Okay, we have a consolidation market. Um, okay. Let me do it like this. Um, sorry. Okay. Forex is a very it's a very nice um, profession. Okay. It only favors those who are patient. You're actually trading against extremely smart people. Okay. You're trading against extremely smart people who want to take your money and you also want to take their money. Yeah. It's a very nice something. Okay. So I think uh, okay, so you can have a consolidation market, okay? And in that consolidation market, it will tend to give you what um, want to put this thing there. Okay. Uh, so we have this here. Okay. Okay, let me just use this one. This is what I want. I'm not getting it. Okay. So you can have a consolidation market, and a consolidation market will give you what? From consolidation, you move towards expansion. Okay. And from expansion, you can have, what's the name? You can have three of them. One, you can have two, and you can have three. Okay. So what are these three? You can have what? A retracement. Okay. You can have a retracement. You can have a retracement. You can have a consolidation. Yeah. Then market consolidates, then it expands. Do you understand? And in the expansion, you can have expansion to retracement or expansion to what? Reversal. Okay. You can even have expansion back to consolidation. So let's make this consolidation. Okay. Then let's make this a reversal. Okay. So reversal. So market will consolidate. Then something will happen, some news, something, then it will expand. You understand? And in the expansion, you can have retracement, or market will expand into a consolidation, or market will expand into a what? A reversal. You get me? Yes. So you can retrace, you understand? Market doesn't consolidate to consolidate. You understand? You can have a reversal not back to consolidation. You can have a consolidation not back to consolidation. You can have a retracement, but no, you can have market moving from consolidation, expansion, retracement, then what? Back to consolidation. No, it's consolidation, expansion, retracement, back to expansion. Market can retrace back to expansion. Market can what? Consolidate, can expand, consolidate and expand again. It can expand, do you understand? Have a reversal, do you understand? And expand again. So you can see that all these three here, all these three. One, one, uh, sorry, two, then I think three. So my lines are not actually nice, but at least you can have a fair idea about what I'm talking about. So yes, okay, yes. So if you're able to understand what I've done here, to help you very a lot. So market consolidate, it expands, expansion into retracement, expansion into consolidation, or expansion into reversal. One of them. And any of them that would happen, it will go back to expansion. So let's say consolidation to expansion. Okay. Let's find one here. Okay. So let's say hmm, you see this area here. Okay. You see price was just expanding down to the downside. Okay. It was just what? Expanding down, expanding down, expanding down. And when it reaches here, what does it do? It start to go what? To go up. So this is what? A reversal, a reversal. So this is expansion in the form of what? Reversal back to what? Expansion. So it's something like this. Expansion, okay, okay. Then we have what here? We have what here? We have a reversal here. Then we have what here? Reversal in the form of what? Expansion. Then so it will expand, reverse, then expand again. So that's what we have here. If you watch here, I've written um, expansion to the downside, then it's reversed to expansion. Okay, so you can have something like this: expansion, like expansion. Sorry, my mouse is falling. Okay, so, okay, I think we are okay. So price is just not getting this down. Well, something is happening to me. Okay, so okay, you can have something like this. Okay, then what does it do? It reverses around this area here, then it guess what? It expands to the upside. Okay, this is what? Expansion, reversal, expansion. You understand? You can have something like this too. You can have consolidation, expansion, retracement. Something like this. Consolidation. Price should just be consolidating. Okay. Then it will what? It will expand. You understand? Then it will retrace. Oh, then it will, after retracement, from consolidation, expansion, retracement. The next thing is what? Expansion. Now what will it do? It will expand to the what? To the downside. Do you understand? So this is what? Expand, consolidation, expansion. It retraced. Then what does it do? It expands lower. Do you understand? Uh, you can have it in what? Something like what? Consolidation. Okay, consolidation. Do you understand? Then you can have what? Expansion. Then you can have what? Another consolidation. Do you understand? Then you can have what? More what? Expansion. So you can have consolidation. Do you understand? Expansion, consolidation, expansion, consolidation, expansion, consolidation, expansion. You get me? Yeah. So that's it. You just have to look at what I've done here, then do using the part two. You just be creating things on your own. Do you understand? It's that simple. Okay. So this is the second video. I'll be doing my third video where I'll be talking about sorry. I'll be doing my third video where I'll be talking about what swing highs and sorry, what a swing high is and what a swing low is. Okay, I'll be talking about what a swing high is and a swing low is, and I'll be delving more deeper into PDRs. Okay, so the first SMC concept we are going to learn is called PDRs. Okay, so in that video I'll be talking about what a swing highs and a swing lows and what reside above swing highs and what reside below swing lows, and I'll be talking about PDRs with arrays are. Do you understand? Yes. So if you're able to learn all this and learn what PDRs are and swing high and swing lows are, then I can delve more deeper into what complex analyzing of what price action. Okay. So thank you for your time and have a good day.